We're talking to Andrew Marques. Andrew is a commercial loan officer at Cape Ann Savings Bank. Good morning, Andrew.
Good morning.
Thanks for being with us. We understand that you are going to talk to us about the EIDL, the Economic Injury Disaster Loan, and the PPP, the Payroll Protection Program, right? Is that right? Am I saying that right?
Yeah.
Yeah.
Yes.
So there's a lot of confusion around these loans. They came out of the CARES Act, the $2 trillion CARES Act. Let's just start by maybe you could generally describe each one of them to us.
Okay. So the EIDL is a loan program that has been for a long time. It's administered directly through the SBA's disaster office, and most usually is used for issues with direct economic impact, a natural disaster. So if a hurricane hit an area that was negatively impacted there, they would roll out this injury disaster loan program. So they have a staff of underwriters and loan officers or administrators within the SBA that handles these loans. And it's a unique program because you don't actually request a dollar amount on the loan. You provide the application and the supporting financial information, and they provide an offer to you on the dollar amount based on your fixed costs as a business owner to help support that, make sure you can pay your bills and come out on the other side of the disaster and be able to generate a positive cash flow quickly. So the loan terms are very favorable for a business owner in looking at the bigger picture of any commercial loan. The terms are up to 30 years for repayment, and it's at a fixed rate of 3.75% for a for-profit and 2.75% for a qualifying nonprofit. And included in the disaster loan program, there's also an opportunity to apply at the same time for a grant of up to $10,000, which can be used for payroll and other qualifying expenses. This would be forgiven and basically reduce the loan amount by that amount that the grant is approved for. So it's part of the overall underwriting that's done at the disaster office through the SBA.
So there are two parts. There's the loan application and there's also the grant, up to $10,000 to the EIDL. Is that right?
Yes.
Okay. And then the latest change we saw to the EIDL was the $10,000 grant. You could only get $1,000 per employee for a small business.
I don't have the details on the qualifying factors in front of me today. I could certainly look into that. We've been focused primarily on the payroll protection program since we are tasked with administering that program. I do recommend you go to the disaster website. It's sba.gov/disaster. They have a lot of details there, step-by-step instructions to walk you through the application process, which is done through their online platform for that.
Thank you. Great to know. Yeah. And we will follow up on the changes we've heard about because I know it's still confusing for people.
Yeah. My understanding is that the loan program has been tailored through the CARES Act to address basically the vast nature of need within the COVID-19 outbreak. So they've tried to tailor a program that already was in existence and quickly ramp it up to speed to address the COVID-19 issues and basically global problem of freezing an economy. And we all kind of feel like we're in a standstill here and waiting for something. I guess I don't know. A little bit survival, a little bit just holding tight and seeing how this all plays out.
Can you explain the PPP for us, please?
Yes. So the CARES Act implemented a new program rather quickly. It was passed on a Friday and launched the following Friday, which seems like a long time ago, but was just this past weekend. So as a SBA approved lender, we have already offered SBA loans, and now we've been delegated authority to administer this loan program. So we are collecting applications from the local business community and those that need to access this. We're really focusing on our customers first, just because of the high demand that we've seen and limited staffing that we have access to at this point to successfully roll it out. We've had a ton of questions in terms of what qualifies, how to come up with the calculations, and those are all kind of trickling in through the regional office. And I do want to give a shout out to that staff at the Boston regional office of the SBA. They've been answering all the lenders' questions. I know they've been swamped with emails, phone calls, probably faxes, trying to get information from the SBA, and they're also working hard to get the information they have out there. So the Paycheck Protection Program, or Payroll Protection Program, PPP is what we're calling it for short, is designed to rehire a business's workforce. The application deadline is June 30th, so that's an important date to have out there. And understanding that the program is first come, first serve, so that's why we're seeing a huge rush of demand. However, it's not a cutoff date. It wasn't last Friday for the application. We're going to be accepting applications through June 30th at this point. And I've heard from various government officials that may need to be updated, or whether they release more funds into the program depending on demand. I know national banks have had an amazing amount of applications, just over the weekend. And we've seen a ton of demand locally here. So as a local bank and federally insured institution, we are an approved SBA lender. So we've been working hard to implement the program. Right now, we're in the application process. So we're busy collecting the application form, which I did share with you. If you're able to distribute, we can get that out there. It is available through the SBA's website, and collecting the supporting documentation for the payroll calculation. So a lot of people have been working with their accountant or payroll representative or payroll service company to develop a worksheet or report, because there's some complicated calculations. It's limited to $100,000 $100,000 per person, per employee. So anybody that makes more than $100,000, you have to carve that out of the overall calculation. So there are some intricacies, and we do encourage business owners to work with the professionals in their sphere to make sure that they're calculating the loan amount correctly, because banks are relying on that to submit the application and get the loans funded. So over the course of Friday, over the weekend, yesterday and this morning, I know the loan officers at Cape Ann Savings Bank, myself, Mike Luster, and Leo Bergeron have all been working to basically muscle through the application process on the SBA's website. They have an online platform where we're working hard now to get the loan application uploaded, get them an SBA loan number, and then we're waiting still on guidance on how to close the loan. The big question right now is what the promissory note will look like. Because it is a loan, there's an opportunity for forgiveness of up to 100% of the loan proceeds plus interest and fees. However, we do need some more information on how we actually close and fund the loans and what exact documentation will be needed at that point. But right now we are collecting applications with the supporting information from the CPA or payroll provider, and getting those that money allotted to our customers and our applicants at this point.
Andrew, do you have any understanding on whether any of these resources are finite?
Yes, the legislation allotted $349 billion for the payroll protection program. I have heard that through press conferences that if the need exceeds that amount, they may go and ask for more funding. But right now, it is at a first come, first served basis of up to $349 billion, which is nationwide, including all the states, U.S. territories, Washington, D.C. So it's limited to U.S. employees, but it's a nationwide program for that dollar amount.
So, Andrew, let's look at this from the lens of two businesses on Main Street in Gloucester.
All right.
I don't know, one's a hair salon with 5 employees, and one is a restaurant that's been closed. I don't know, is that a good example? Is that a good example, Corey?
Well, they're both, the salons are definitely closed. Some restaurants may still be doing takeout or whatever,
Okay.
Right.
So small businesses, very limited number of employees. Maybe there's a third that's a sole proprietor. To which of these 2 loans would you direct these businesses?
That really depends on the business's working capital needs. So how much money they need at this moment. If they have reserves, if they've been able to save some cash through their operations and can avoid borrowing money at this point, the Paycheck Protection Program is a good option to support rehiring of the workforce. So a combination of cash savings and the Paycheck Protection Program can basically keep a business afloat until the economy reopens, whether it's reopening of restaurants, hair salons, the service kind of industry, even hospitality industry. So it's the key with the Paycheck Protection Program is you need to rehire your workforce at the same level that it was at prior to the outbreak happening, and basically the fallout we've seen of business closings, stay-at-home orders, and that everything we've all been dealing with. So the dollar amount there is limited based on your historical payroll. So you may only qualify for $3,500 if you have 2 employees that get paid bi-weekly. So there's a specific calculation in the guidance that is required to come up with the dollar amount. On the disaster loan program, it's not just payroll expenses. You can use it for all your fixed expense needs. So with the paycheck loan program, 75% needs to be used for rehiring or maintaining your workforce. The disaster loan program, you're able to use those funds for anything that you basically need to keep your business operational. And that includes insurance payments, resupplying inventory, paying vendors if you owed them money from, prior to closing your restaurant, for instance, if you had food costs that you weren't able to pay off with,
Well, and I think what adds to the layer of confusion, Andrew, is that there's a presumption that both of these offerings will be forgiven. So there's some are just thinking, hey, cash grab, or hey, this will help keep me afloat. And so that's where things get a little muddled.
Yeah. So that is key in where it can be forgiven. So the disaster loan has the grant of up to $10,000, which would be forgiven, and you would know right then when it's approved. You can also borrow additional funds that can be paid off over a long period of time. The Paycheck Protection Program, you have to perform on your end of that by rehiring your employees, and you take on some risk by bringing those employees back. But again, this is designed to rehire the workforce locally. So that's what we've been working with, and we've seen everyone from sole proprietor, self-employed individuals, and subcontractors can apply on April 10th. We'll start taking applications then. So people that are self-employed, that work for others on a 1099 basis, can be reimbursed and qualify for this loan. But we've also seen people that have 30, 40, 50 employees apply for this to make sure that they maintain their workforce there. The disaster loans have a longer repayment period. So you can use both, and that's key. And I think that's part of the misunderstanding right now is I need to use one or the other. So the $10,000 grant, if you qualify for the $10,000 and you also apply for a PPP loan, that $10,000 is rolled into the new loan, and that new amount would be available for to be forgiven. The remaining amount on the disaster loan would be paid off over the set term, which is up to 30 years. On the PPP loan, if the loan isn't forgiven, if you're not able to rehire your entire workforce, they will determine at what level the loan is forgiven at. And also the key there is to maintain good records of where you're spending these funds. We're going to be required to collect supporting documentation when you apply for loan forgiveness. So, it's really important for people to understand that in both instances, it is a loan. You are borrowing money and basically signing a promise to repay that money. If you qualify through the loan program for forgiveness, then that is obviously waived and paid off by the legislation, and basically the federal government pays the bank. So the PPP loans have a limited repayment time period too. It's a 2-year loan. So if you borrow whatever dollar amount you're borrowing, you agree to pay it off in 2 years. It's got 6 months of deferred payments, so you don't pay anything for the first 6 months. And then after that, it goes into a repayment of that loan amount based on the remaining balance after any forgiveness there. So it's not an all or nothing forgiveness either. If you bring back as many employees as you can, you will be able to get some reimbursement for the loan amount, some forgiveness for the loan amount, but you will be responsible to repay anything that is borrowed.
Does it matter how the business is designated, whether it's an LLC or an S Corp, et cetera?
No, it doesn't matter. In fact, they've expanded who qualifies for these loans. Typically, for any SBA loan, you need to be for-profit. They've expanded both loan programs to nonprofits because obviously they're very instrumental in everything going on locally and nationally. So they have people that they employ that have been laid off or furloughed. So they've actually expanded the number of people that qualify. The documentation and what the banks need to collect depends on what type of business you are and who can sign the loan documents and everything like that. But basically any person that's not an employee of somebody else will be able to qualify for one of these programs in one way or another. And I think that's really important for people to understand.
That is very important. Yeah. It's still pretty nuanced. I mean,
it is.
People really
need it. And I apologize for that. I wish I came on here and had all the answers for you. Because of how quickly, especially the Paycheck Protection Program has been rolled out, there are a lot of details and unique situations that need to be addressed. And that's why banks have been in such frequent communication with the regional offices to really have a good understanding of how this will play out over the course of the loan. Every business is very unique, and especially in Cape Ann, we have a lot of unique businesses, seasonal businesses that don't fit your typical idea of say a manufacturer that has 100 employees and they're making widgets to send to distribute across the country. That's kind of the textbook version of the easiest way to understand kind of a loan program like that. But obviously, you hit the nail on the head. We have restaurants, salons with a number of employees, different other unique businesses in town that all do qualify for the program. And we're waiting on further guidance from the SBA and Treasury on to answer these details, and working hard right now to make sure that we're doing what we can to carve out the funds available and get that into the local economy as quick as possible. But due to the timing of rolling this out, there are some unanswered questions and some nuance that still needs to be addressed.
Yeah, Andrew, do you know, so what if the situation is that you don't give yourself a paycheck if you're a sole proprietor?
So we're going to collect your basically tax history information, and there's a calculation based on your income over the most recent tax filing. So we're going under the assumption right now that it would be your average monthly net income for someone that files on Schedule C times 2.5 times. So 2.5 times your average monthly net income over the course of 2019, or the most recent trailing 12 months if you maintain QuickBooks on a weekly or monthly basis. You can use more recent history than just the 2019 fiscal year.
Yeah. Well, Andrew, is there anything else you think people should know today?
Yeah, I think the real key is you don't have to choose one or the other. If you're using both loans for different purposes, with the Paycheck Protection Program focused mostly on rehiring your workforce and some additional qualifying expenses, and you're using the disaster loan for any additional working capital needs beyond just payroll, as long as you're maintaining accurate records and acting in good faith and using the funds for different purposes, you can qualify for both. And that's been uncertain, and it's come up a lot in the frequently asked questions that we see coming out of the SBA office. The second is to be sure that you're providing accurate information on your application, whether that's through help of, again, your accountant who knows your business financials more intimately than just your banker, or your payroll service provider that can provide a report with a couple clicks of the mouse through their online platforms, because the onus is on the business owner to provide the bank with accurate information. So you are at somewhat of a risk if you provide inaccurate information, or you're not able to rehire as much as anticipated now on June 30th. How that will play out in terms of effective implementation of the program, with a lot of factors that we just can't control. If the economy doesn't open by June 30th, God forbid, right? What do we do at that point? Well, we're going to have to address it across the board. But as long as we're all kind of working through this together, that's the key. And we're all kind of in the same boat too. A lot of information is a little bit unknown. I know the SBA, especially the regional offices, are working hard to stay on top of all the information that they're getting on a daily basis, and questions that they need to answer for the lenders implementing the program. The key is to roll this out quickly, and I think all the banks are really working hard to be able to be sure that they have a good understanding. They're not going to provide loans to businesses that either don't qualify for reimbursement or can't afford or can't qualify for the loan. We don't want to make it a burden on anybody in the long run. You don't want to make a loan that someone can't repay, or can't afford, or isn't the right option for them. So through help of your banker, your accountant, we can help determine really the best loan option, or a combination of both, and work together as a team to kind of muscle through it at this point, because we all need to work together to really have a good understanding and answer any unanswered questions before you sign on the dotted line.
All right. So Andrew, I'm a Cape Ann Savings Bank customer for my business. So I should be speaking with my accountant and then trying to speak with you to work through this?
Yep. You can deal with any of the three commercial loan officers at the bank, like myself, Mike Luster, Leo Bergeron. And, we are working with our existing customers primarily right now to address that initial demand that we've really seen ramp up so quickly since this was announced. So by talking to your CPA who knows any really tax implications of taking on loans, and having an understanding of your operating expenses can help develop the report or worksheet needed to support the application itself, and then your local banker to get the process through the SBA and ultimately funded into your account. So it's a team effort for sure, and being able to tap any resources that you have a relationship with is very useful, especially right now with seems like so much uncertainty with how businesses will survive going forward.
Well, we really appreciate your time, Andrew. And if you don't mind, we'd like to maybe follow up with you in the weeks ahead, because I'm sure
yes, I'd love to share additional information as it comes across my desk, and be able to provide any updates in that manner. So,
okay, truly appreciate it. All right, we'll be in touch. Be
all right.
well.
Thank you. You too.